Welcome back to Investing Talk Podcast.
Today we're looking at stock.
As usual, before we start, subscribe, like, and comment to this video to support the show. And if there's a specific company you want us to look into, leave it in the comments below.
So let's get into the analysis.
Okay, so first things first, what kind of company are we looking at here?
We are dissecting a late-stage, clinical-stage oncology company. And that, immediately tells you something.
Right, because the fundamentals are all about the science, not sales.
Exactly. Stock is pre-revenue, so their entire P&L is driven by R&D, research and development, and G&A spending.
For anyone new to biotech, that means high risk.
Very high risk. But the potential payoff, if the science works out, can be absolutely transformative.
So with these pre-revenue companies, you always have to watch the cash burn. I saw something interesting in their financials on that front. Their R&D expense actually went down a little in Q3 2025. It was, what, $4.2 million versus $4.4 the year before?
Yes, and that small reduction tells a huge story. It's not just, random cost cutting.
So what's driving it?
It's because enrollment for their main study, the pivotal Phase 3 REGAL trial, is now complete. Those are huge costs that are now dropping off.
Okay. So that helps the bottom line. Their net loss improved a bit.
It did, down to $6.8 million from $7.1 million. I mean, managing the burn right before huge data readouts is just textbook strategic finance.
But liquidity is still the name of the game, right? The cash runway is everything.
It is the single most critical factor. They live or die by it.
So where did they stand at the end of the quarter?
As of September 30th, they had $44.3 million in cash. But here's where it gets interesting.
Okay.
In October, after the quarter closed, they got another $29.1 million.
And this wasn't a standard equity raise, was it?
No, and that's the crucial part. This cash came from warrant exercises.
Which means existing shareholders are doubling down.
Yeah.
They're reaffirming their belief in the company right before the most volatile period.
Exactly. So that brings their pro forma liquidity, their on-paper cash, up to a really strong $73.4 million.
That's a fantastic cushion.
It is. Management has been very clear that this is enough cash to get them through the REGAL trial's final analysis and past the key data points for their second program, SLS 009.
So they don't have to raise money with their backs against the wall. They can wait.
They can wait. They can raise capital after the catalysts, hopefully at a much higher valuation. It de-risks things significantly for current investors.
Okay, but we have to tackle the elephant in the room here. Dilution. The share count just exploded. It went from, about 105 million in June to over 142 million in November? That's a 35% dilution.
It's substantial. There's no question.
So is this a good sign, like you said, with shareholders showing conviction? Or is it management just grabbing cash before a potentially bad result?
That's the million-dollar question, isn't it? And the answer is probably a bit of both, but I think the interpretation leans bullish. Because the money was raised to fund known value-creating milestones. It's not just to keep the lights on. And that $29 million from warrants, specifically, that's existing investors choosing to put more money in, that's a vote of confidence.
All right, that's a good pivot. So they have the cash, $73 million worth. Now, the real question is, what's it funding? Let's unpack the science.
Okay, so the whole value proposition here is based on their science and their IP. They have two different platforms, both going after acute myeloid leukemia or AML.
Let's start with the big one, the most advanced asset.
That would be GPS or galinpepimut-S. It's a WT1 targeted immunotherapy.
Can you break that down for us? What is WT1?
So WT1 is basically a protein that's overexpressed in a lot of cancers. It helps them multiply. GPS is designed to teach the body's own immune system to find and attack cells that have that WT1 signature. It's technology they license from Memorial Sloan Kettering, which is a big deal.
And this is in that pivotal Phase 3 REGAL trial we mentioned. It's for a specific group, right? AML patients in CR2. What does CR2 mean?
CR2 stands for second complete remission. So these are patients who've been treated, they've relapsed, they've been treated again, and now they're back in remission.
A very vulnerable population.
Extremely. The whole goal of GPS is to keep them in that remission and extend their overall survival. It's a very high-value outcome if they can do it.
And we did see a key de-risking event for this trial back in August.
Yes. The Independent Data Monitoring Committee, the IDMC, gave it the green light to continue without any changes.
Which is a huge vote of confidence.
It's massive. The IDMC sees the unblinded data. If there were any major red flags on safety or efficacy, you would not get that nod right before the finish line.
Okay, so that's GPS. Now let's talk about the second asset, which seems to be what's really driving all the recent market excitement, SLS-009.
Right. SLS-009, also known as tambiciclib, this one's a small molecule CDK9 inhibitor.
And CDK9 is?
It's a key switch that cancer cells use to stay alive and resist treatment. SLS-009 is designed to go in and turn that switch off.
And they claim this one is potentially best in class. Where's that advantage coming from?
It's all about a better safety profile. They claim it has reduced toxicity and increased potency compared to other CDK9 inhibitors that have run into trouble.
And less toxicity is a big deal.
It's everything. If your drug is safer, you can combine it with other powerful drugs more easily, and that just opens up a much bigger market.
So you have this dual asset pipeline. Both are for AML, but one is immunotherapy and one is a targeted inhibitor. What's the strategy there?
It's about resilience and synergy. AML is a complex disease. This lets them attack it from multiple angles. They could sequence the therapies, maybe combine them.
And probably makes them a more attractive partner for Big Pharma.
Exactly. It makes them a much more attractive M&A target.
Let's get to the data that really turned heads. The SLS-009 Phase 2 results in some very sick patients.
Yeah, this was in relapsed or refractory AML, and the data was, frankly, eye-opening. They got a 46% overall response rate across the board.
For context, what would you normally expect to see in a population like this?
Low single digits, maybe low teens if you're lucky. A 46% ORR is just outstanding here.
And it got even better when they looked at patients who'd had less prior treatment.
That's right. For patients with only one prior line of therapy, the ORR jumped to 58%. It suggests the drug works best before the disease gets too complex.
But a response is one thing. You need it to last. What about survival?
This is where it really shines. The median overall survival, or MOS, hit 8.9 months in that least pre-treated group.
And for a patient with refractory AML, an extra 8 or 9 months is.
It's a massive clinical gain. It meaningfully beats the historical benchmarks for this population.
And safety. The key detail I thought was no dose-limiting toxicities.
That's the gold standard. It means you can potentially combine it with standard drugs like venetoclax and overcome the resistance issues you see there without adding a bunch of new safety problems. It's a huge deal.
And they have a longer-term strategy here, too, with a biomarker.
Yes, the ASXL1 biomarker strategy. This is where it gets really smart.
So they're not just treating all AML, they're looking for a specific genetic marker.
Exactly. ASXL1 is a mutation found in a lot of cancers. Preclinical data showed a 67% response rate in solid tumors with this specific mutation.
So they can be much more targeted.
Right. It moves them into precision oncology. You can run smaller, cleaner trials. You can potentially get accelerated approval, and your M&A valuation goes up because you have a clearly defined patient population.
Okay, so based on all this, they're planning to expand into newly diagnosed AML next year. But before that, we have some huge catalysts coming up, like in the next 3 months.
2 massive events. First, the big binary one.
Yeah.
The final analysis of the Phase 3 REGAL trial for GPS. That's expected by the end of this year, 2025.
And the result there, good or bad, will completely redefine the company's value.
Absolutely. The second one is the full Phase 2 data for SLS-009 being presented at ASH.
The American Society of Hematology meeting. The big stage.
The biggest stage. A great reception there will solidify that best-in-class story and really drive sentiment into 2026.
Before we move on, let's just quickly touch on that regulatory overhang for SLS-009, the clinical hold.
It's an important point. The FDA has it under review for a full clinical hold lift. Now, this was related to safety concerns with other drugs in the CDK9 class.
Not SLS-009 specifically.
Correct. And given the data we just talked about, especially the no-dose limiting toxicities part, it strongly suggests they've overcome those historical safety issues. It's a hurdle to clear, but a positive resolution seems highly likely.
Okay, let's shift to the technicals because the chart definitely reflects all this clinical optimism. The stock is up, what, over 90% this year?
Over 90 and over 150% in the last 12 months. But what stands out to me is the momentum.
What are you seeing?
We just saw a classic golden cross. The 20-day simple moving average crossed above the 200-day. That's a textbook signal of a trend reversal in institutional accumulation.
And the volume has been there to back it up.
Huge volume spikes, especially around the SLS-009 data release. This isn't a low-volume squeeze, it's conviction.
It's a high beta stock too, right? Around 2.6.
It is, which means any good news gets amplified on the way up. It's a classic momentum play heading into a binary event.
And Wall Street seems to agree. The analyst price targets are pretty bullish.
Very bullish. The median target is $7, with some going as high as $7.50.
That's, what, 250% upside from here? A potential multi-bagger?
That's what they're pricing in. They expect a successful outcome to cause a major re-rating of the company.
We're also seeing some insider and institutional buying.
Yes, a director recently bought over 63,000 shares. That's a strong signal. And seeing a name like BlackRock take a position, that adds some serious institutional validation.
All right, this is where we need to be critical. The Regal result is a true coin flip. We have to address the bear case, the risks.
And we can't overstate the biggest risk: binary clinical failure.
If the Regal trial fails.
If it fails to show a meaningful survival benefit, the value of GPS basically drops to zero overnight. The stock would crash, and it would be valued purely on the SLS 009 pipeline. It's a real possibility you have to underwrite.
And even with that $73 million cash cushion, long-term dilution is still a risk.
It's always a risk for a pre-revenue company. They'll need hundreds of millions more to commercialize these drugs if they're approved.
But the mitigation there is timing.
Exactly. The cash lets them time that next big raise. They're betting they can do it after a big win when the stock is much, much higher. It minimizes the hit to existing shareholders.
And finally, competition. AML is a crowded space.
It is. But their defense is differentiation. The WT1 target for GPS, the ASXL1 biomarker for SLS 009, these are unique approaches.
So even if a competitor has a drug, these could be used alongside it.
Precisely, which makes them, again, a very attractive M&A target for a big pharma player looking to buy a differentiated pipeline.
So if we bring this all together, how do you frame the risk versus the reward?
Look, the company is right on the cusp of a transformative period. This is not a low-risk investment. You are betting directly on the outcome of clinical trials.
A true biotech gamble.
In a sense. But they've secured the cash to see it through, and they have a second asset in SLS 009 that looks incredibly promising and de-risked from a safety perspective. So the potential upside, I think, is far greater than the downside risk right now.
So you think success offers an asymmetric reward?
I do. The current price has a lot of failure already baked in, so any success could lead to a massive re-rating. It's a high-risk, high-reward setup for investors who can stomach the volatility of these upcoming catalysts.
If you found this analysis helpful and want to stay informed on high-conviction opportunities like this, make sure you hit that subscribe button.